there comes a point where you have, enough, whatever you're buying, jewelry, cars, shoes, and then you have to start, empowering people around you, right? Or you have to start making the environment around you better, which will, by default help somebody else, even if it's just your inner circle. All right. So what I would like to talk about, before we start looking at the charts, is the news, man. Like, what happened this week? What happened in the news this week? It's not a trick question.
Got interest rate talks. Consumer sentiment is not happy. And what else?
So let's talk interest rates. What about the interest rate?
They're talking about it going up, but I saw you posted an article. I didn't read it yet, but they're looking at another rate hike.
Right. Well, please read that article, because to me, that article is everything, because I dropped it in the news. Let me see if I can just pull it up. They are talking about a rate hike, right? So Canada, they raised their interest rate a full percent, 100 basis point, 1%. And, that kind of forces our hand, because we have runaway inflation. Runaway inflation is not good for anything. It's not good for anybody. It's not good for currency, because eventually, if we can't get the inflation under control, it's going to wreck.
Okay, but has anyone really determined the cause of the inflation? Because you hear from the Republican politicians, it's just because people got the stimulus checks 2 years ago, and they're still living off that $12.
The stimulus checks are definitely part of it, but it's not just
$1,200 2 years ago. I mean, come on. I mean, it can't be just that, because if that was the case,
they printed at least $6 trillion that we know of.
You got or I don't want to say you personally, but the common person got $1,200. The businesses got
way more,
millions of dollars. So the people were fucked once again. They just don't realize it. Oh, I got my $1,200. Oh, I got a second $1,200 check.
Yeah, but what I'm saying is the Republicans keep saying it's the $1,200 checks that people got 2 years ago. That's why they don't want to work. That's why we have inflation, because of the checks. It's like they're trying
to. I mean, it's a political spin.
The $1,200 check.
It's a political spin. It's right. They're not being totally honest, and
so
that's not.
What is the actual cause of it? It's just because they did print money, and that's the reason. Because it's like, I know that the supply chains are not totally fixed. I know we're still in. People are still having issues with COVID. I get that. And I understand that a lot of people are not going back to work. They are finding other jobs and becoming entrepreneurs versus,
all of that affects the job market. But inflation inflation just means that you pump so many dollars into the system that prices have to go up. Like like my brother was saying, the goods, the assets, the things that are out there for us to buy, they don't get more expensive. But since they pump the dollars out there, the value of the dollar just drops immensely.
Mm-hmm.
Right? So now, instead of $2 for a gallon of gas, now it's $4 for a gallon of gas. I mean, you pump all this money out there. But you can't just pump money out there. The money is just a piece of paper. So if you pump the system full of money, everybody has money. Now you have to increase the prices. If you don't increase the prices, you're going to have two things to happen, right?
Mhm.
So just like people bought up all the toilet paper, what if they bought up all the TVs, bought up all the cars, bought up all the gas, bought up everything? Then, I mean, then what?
That would
Yeah,
cause a
well,
shortage of
there,
stuff, and then whatever's out there would be higher. I
well,
get that. Yeah, that I get.
so that's a lot of it too. You know, you have a demand issue when everybody has money, they want to go spend it. So your demand is high. You just told me that we shut down the world for a whole year, so there's nobody making any supplies,
Mhm.
but everybody has money. I mean, I was in California and everybody, like the beer shelf was empty. It stayed empty. You know what I'm saying?
Yeah.
So who's making the beer? Everybody's
Nobody.
drinking it. And that's just one example. You know, it's not just the beer, but you know, like shoes, clothes,
Yeah.
you know, whatever. You know, you have people have money, they have time. What do? They're going to spend their money. So the demand is super high, the supply is super scarce. Price has to rise. Right now, we're 2 years removed. But when has the supply chain fixed itself? When have we made up for those losses?
We
China
haven't.
is China still closed?
Not,
Oh,
from what
they,
I
they're
not
kind of
really,
just
but
opening back up.
they're not really just. I think yeah, they're just starting to kind of get back in the swing of stuff, which is another issue. And probably the only thing I actually agreed with Trump about is that we should not depend on one country making all of our stuff.
Well, Des, who else are we going? Who else is going to make our stuff?
Well, we could, but then the companies don't want to pay the American people, a
The
decent
companies
living
don't
wage.
want to pay because you ain't going to pay. Are you going to pay for
No, I'm not going to pay
for a pair
$20.
of socks? You going to pay $20? Because
No,
well, everybody getting $15 an hour to
that's
work.
the issue.
$15 an hour to work. How much do you think your pair of socks is going to cost?
I know that's the issue. I know.
So,
I-
you know, I mean, it's nice to say that we shouldn't depend on a company, but we've created an environment to where we do. What I mean, people kill Nike about those sweatshops over there in China or you know, in Vietnam or Taiwan, you know, but all of that stuff is a necessary evil because those sweat boxes where they're making shoes for 19 cents an hour or whatever, we ain't gonna do that in the United States. You can't make anything in the United States for cheap. If we wanted somebody to pick cotton these days, it ain't gonna be cheap. It ain't gonna be cheap. Back in the day, you had the slaves to do it for free. Now they replace slaves with cotton gins, right?
Mhm.
But just think, who's out there picking wheat, corn? Who's doing any of that? The illegals that we ran out the country. That's so bad for the country. Now you got help wanted signs. Some jobs Americans aren't doing because you're too good to do it.
No.
Anybody fixing to go be somebody's maid? They ain't fixing to clean toilets. They're not gonna pick peas. You know, it's just some things that Americans aren't cut out to do. You're not going to New Mexico in the fields and working. You're not going to North Carolina and working in tobacco fields. No, the illegals do that.
Yeah.
And that's a conversation that the masses aren't ready to have.
Yeah. True. I agree.
They're never going to be ready to have it, but they're going to whine about the cost of everything.
Exactly. And like people that build houses, what do you think? I mean, come on, man. They go to Home Depot. Y'all see them people at Home Depot? How many people pull up and say, hey, man, let me see a green card? They pull up and be like, hey, man, I need masonry. I need masons. Jump in the back of the truck. It's everywhere. And the services are needed and we patronize and we use those services until we get in front of a camera, and then we talk about, we have illegals in the United States working and they're taking all the jobs. Now you have plenty of job openings. Why? You know what I'm saying? I mean, we have to talk about everything. We can't just talk about the stuff that we like to gloss, you know, like we like to read. It looks good to us. You know, some jobs won't ever be filled. I mean, who's working at Taco Bell if you're not a 16-year-old? Are you going back to work at Taco Bell or Burger King? We all want to go, we all want to go eat fast food, but none of us want to go cook it or clean the grease up. Hell, not even the 16-year-olds these days want to do it.
No.
Oh, Sean,
No, they don't.
man, we used to walk to work, Sean. We used to walk to work, hot as hell. Man, you think these kids gonna walk anywhere? Shit.
Well, perfect example. My son, they told him, he said, okay, I need to be off at 8:00. And it was working at some restaurant. And turned 10 o'clock. He said, look, I told y'all need to be out of here by 8. And they said, well, we need you to do this, this, and this. He said, okay, see you later. And he never went back. I said, who does that?
Exactly.
Oh, Lord.
I mean, this generation does that. And you
Yeah.
know, Sean said something to me a long time ago. I remember it was the first time I thought about it. How like this generation ain't working. Remember they said Wall Street, you used to go get a job at Wall Street. What would you say the hours were, Sean? I knew it was a 9 to 5 job, but
Yeah, so somebody posted on Twitter or Reddit or something. You know, one of them young interns that was doing a Goldman Sachs internship, and he said that he knew he was signing up for a 9 to 5 job. He just didn't know it was 9 p.m. to 5 a.m. You know, basically he didn't want to put in the work like they have, I guess, for decades, you know.
well, even even your wife, Sean. I was talking to Darwana. Darwana's a doctor. So back in the day, in order to become a doctor, what do they call that, Sean? When you
you gotta do rotations. You got to be a resident, you know, for 3 or 4 years, depending on your subspecialty, and you get Hayes, and it's a lot of long hours, you know, and you do all the work basically, which over the years is what makes you an expert. But the attendings, you know, the real doctors, you know, they haze you and they're rude and they're mean, all that kind of stuff.
and now they don't do it anymore, or they can only work so many hours.
Yeah, they've cut the hours down. You know, you can't work a resident, you know, for crazy ass hours. You know, it's not politically correct these days. Whereas back in the day you could. And that's kind of, you know, that reminded me of that Goldman Sachs, you know, intern that was sarcastically posted on Twitter or Reddit, you know. So basically the theme is, you know, people don't want to do the work, you know, and really it's the same with trading. You know, we want to start trading, we want to put in minimal effort and make millions of dollars, but really you got to look at trading, at least the way I look at it, is kind of like being a doctor. I mean, you gotta, it will take years for you to become, you know, probably an expert. Hopefully it don't take too many years for you to at least start making money, but for you to become an expert, you know, it's probably going to take, you know, 3, 4, 5 years of being on them charts and doing all the shit that nobody wants to do.
And that's the issue. But I think the people who actually find the success or start seeing the success, I mean, are the people that can directly look at how much time that they started putting in, right? Like, Des, you actually had to start listening to ICT to start getting some of these concepts or start seeing things go the right way, right? Or
Yeah,
go
yeah.
better for you.
Because I mean, I took 2 smart money courses, Savannah, oh God, and it clicked, but some things weren't, and I got it, but some things still were like, you know, well, why? But no one was really answering the why. He answered a lot of the why, and also made me see things that I wasn't looking at before. And it made it, things started clicking even more so. So, and I will forever be grateful for you, Todd, for telling me that, because I was like, why I need to go watch him? But I forced myself to. And I'm grateful for that, because it's giving me more insight into a lot of different things of how the market moves. And it's just, I feel more comfortable with pairs now, which, I didn't for a long time, which is crazy because I know people don't like US 30 or Nas because they think it's hard. Well, I find it easy, but I thought pairs were hard. But now I find pairs just as easy because of how he breaks it down and how I'm able to look at it differently now than I did before. Even with knowing the order blocks and all this, it just makes more sense now.
And that's exactly why I stress you have to go do it yourself, because if it doesn't make sense to you, if the why behind it isn't there, you're never going to be able to pull the trigger on your own. You're always going to second guess, even when you know you're going to second guess until you start to see it. But you have to go get your why, and you have to understand the reasoning behind these market moves in order for you to start going and finding your own trade ideas and your own trade setups. The reason, ICT is a hard listen, because he's wordy, and he's arrogant. A lot of people find it difficult to listen to arrogance. That's Savannah is arrogant too, but she's more rude, than ICT, in my opinion. But you can't deny, the way she trades and the setups that she finds. And her approach might be a little bit different, than some people use. But if you trade the way she trades, you can be very successful. So I don't want to knock any of these guys, whether it's Savannah, whether it's Swaggy, J Take Profits, Jeremy Cash. Like, at the end of the day, they've elevated their family's lifestyle and the people around them, right? It's interesting that you've bought a few courses. Like, these are rhetorical questions, but you have to ask yourself, how much did you invest in your trading, in your journey? How much did you invest in yourself? How many courses did you buy? How many accounts did you buy? How much money have you spent on learning or perfecting your craft? How many books have you read? How many, YouTube hours? YouTube is the new university. It's the new, it's a new Harvard to me. You can learn anything you want, anything in the world on YouTube. So do not knock the power of YouTube, man. Like, if you don't understand geometry, you can go to YouTube and there are 30 videos that will explain geometry, trigonometry, calculus, whatever. You can probably find like open heart surgery stuff on YouTube. If you're a person who can self-teach, you can learn how to do whatever you're trying to do on YouTube. And you can even find videos that actually show you, step by step, changing the battery, changing the tire, changing the alternator, anything you want can be on YouTube, is on YouTube. So whenever people give me excuses and tell me they don't understand, then subconsciously I already think that this is a person that either A, doesn't know that they can go find this on YouTube, or B, they're unwilling to go and do the research, because you can type in whatever you want to and it's going to pop up on YouTube. Now, I'm not saying don't use those of us who have already done it, or we can't bring that to the table, but you're in a room with 500 or 600 now traders, and we're all at different levels. I'm by no means anybody's expert. You know, I found what works for me, right? I'm not anywhere near the level I will be in another 2 years, but I found success in my little area, you know, things that work for me. And I can just do my part to help you see the market the way I see it. With that being said, there are other people, Alicia, Dez, Fred, you know, Altcoin, Will, they found success doing what they do. And it's undeniable, Justin. So I think that you know, if you're just in the room and you're listening to the talk every day, or you're reading what's going on out there, you will find reason to stay motivated, right? Uh, maybe you can't pass a challenge. Maybe you're pressing, whatever the case may be. Once you get your trading style down and you start recognizing setups, that's it. You know, it's going to happen for you, but you have to put the work in. You have to practice. You have to fail. You know, you have to be tricked. But then you'll understand these news reports. You know, that's why I like to talk about the fundamentals, because a lot of people might understand the technicals and they can see things on the chart, but they don't appreciate the fundamentals. And the fundamentals are what's going to help you to, you know, apply the fundamentals to the technical. That's what's going to help you find trade setups that are probably better. You know, it's going to bring you more movement, because you understand the volatility is going to be when you pair a strong currency against a weak currency, not two strong currencies together. Oh, this should move, this should go up. It might go up, but it might not go up as far as you think it's going to go up, because that currency is strong and you should have paired against a weaker currency. But all of this stuff takes time. It's not going to take a week. It's not going to take 2 weeks. But if you just keep showing up and you keep putting the work in, and then you put the work in when we're not on this call, we're on this call for an hour, hour and a half, once a week. But the real learning is going to take place on your personal time, when you sit down and you look at the charts and try to extract information for yourself. And hopefully everybody, you know, takes time and they do that for themselves, you know. And you got to write things down. When you hear it on this call, if you don't write it down, you're going to forget it. Then the next week you might remember, oh yeah, you know, somebody said this and that. If you don't write it down, it's time wasted, and you wasted another week. You know, what I've found is every week we'll get on this call and we'll talk about moves, and those moves will happen in the market. And you'll either make money with those moves or you won't. Maybe you executed the trade. But the one constant is the moves happen. So if you're in a place where the setup is there and the moves are happening, it's only a matter of time before you start executing those moves successfully, right? It's only a matter of time before you figure out, okay, the move didn't happen until after Tuesday, or the move didn't happen until whatever, right? The time of the move is going to start making sense. Maybe you're writing it down, right? The move happened this date, this time. Once you start doing that, then you have undeniable proof in your face when you should start looking for the move, or the time frame that you should this move is happening. If you never write it down, you're going to be there until you start writing it down. So the news, back to the news. You know, I know we kind of got off, you know, into the weeds, but it's very important that you start making notes and doing the research. So this news that came out, can you guys see my screen? These rate hikes?
Yes.
Rate hikes, easy come, easy go. Like, these guys are already, we're now baking in interest rate cuts from the Fed in the second half of next year. They're already talking about cutting interest rate. I mean, we're still raising, we're talking about raising the interest rates, either a full percentage point, 100 basis points, or another 75-point move. And this article, they're already talking about cutting the interest rates. Why do you cut interest rates? Why? Why are they talking about cutting interest rates?
Recession that they're anticipating.
Well,
It might already be in.
we're in the recession. We had 2 negative quarters, which is the definition of a recession. So we're in a recession, and the only tool we have to jumpstart the economy is to cut interest rates. Yeah. So the countries who have raised interest rates have the ability to cut the interest rates when the economic activity stalls, right? So it makes it cheaper to borrow money, to buy houses, all that good stuff, right? So we're going to raise interest rates until the second half of next year, and then these bank heads, these strategists at the bank, they already plan on when the Fed is going to come out and cut interest rates. So there's a lot that's going to happen between now and then. So these experts, right, these economists, these bank heads, they feel like that the Fed is going to raise the rates into a recession, like deeper into a recession. It's going to get bad. And then they'll start cutting rates to mitigate the damage that they've done to the economy the middle of next year. All of this is money-making opportunity for us as traders. But for the most part, this is probably our first recession that we're actually trading, like going into the recession. And it will be our first I guess recovery. I mean, we traded the recovery this year, but if you didn't understand that the fundamentals behind it, you probably were lost in the sauce. I can remember one of my last comments in Ruby's course, whenever Tanisha was telling people to buy the indices. And they were selling heavily, and I'm like, oh, this girl is crazy. So if you understand the fundamentals, like, she would have understood why those indices were selling out, because everybody knew that we were about to raise interest rates. So the indices were selling. There was a guy in Ruby's class too, a black dude that kept talking about buy the dip. I can't remember the dude's name, but I know he got crushed because he didn't understand that the indices were now selling, versus they were long-term sales, the same way they are now. We do get big upswings in between the sales, but don't be mistaken, they're sales. I mean, that's the direction of the indices have been down since the end of December. Yep, the end of December, January. US 30 started selling, I want to say the second week of December.
Okay.
And the NASDAQ started, around the 1st of January. But
what's really crazy about this recession is previous recessions, we've had high unemployment. Now we've got, unemployment just fine, and inflation. I've just never, if you think about it, I've never been through this.
Well, I mean, we'll still have unemployment. It just hasn't gotten to that level. But if you listen to the talking heads, we do have a lot of job openings still. We just don't have the people there to fill those jobs, and that's a combination of what we talked about. The illegals probably occupied a lot of these low wage, low skill jobs. And like you said, there's some people that never came back. They're doing YouTube, they're doing OnlyFans, they're doing whatever they're doing, but they're not going to traditional work. Well, I mean, I'm just being honest, man. Like, people have found out how to make money in non-traditional methods, and they're making money. So those people will never come back to the workforce as long as they can make money on their own terms, and they can make money, in significantly more than what they were qualified to make. So, I think you're going to have, this is a perfect storm of all that activity. If everybody in our group becomes a successful trader, that's 600 more people who aren't going to go to jobs. And then you're going to go teach 2 or 3 people. So eventually, it'll all work itself out, because, as long as people make money, they're going to spend money. That's how Americans do. So the economy, the economic slowdown it may look a little different. It's going to evolve. It's not going to be the same type of a slowdown every time, because people make money in different methods. There are a lot of people who are going to get rich because of the recession. They'll make all kinds of money. Maybe they spend it, maybe they save a little bit of it or whatever. Maybe they invest it in some companies that they think, is still going to be good. But the point is, the talking heads, the experts are miffed about a lot of this stuff too. So, it's something that me and my brother were talking about a couple of weeks ago, is these wild swings in the US 30 or NAS. I mean, if you go in the past, you're not going to get 800 moves every week, 800-point moves. Sometimes we get them twice a week. I mean, that's crazy. If you're an excellent trader of those indices, I mean, you can make thousands and thousands and thousands of dollars once or twice a week. So, how many points does the market have to move for you to double your account or flip your account or whatever? It can be a couple hundred pips or a couple of 100 points, but this market is moving 600, 700, 800 points. I mean, that's crazy. You would have thought that on what was it, Friday? You would have thought we weren't in a recession.
Yeah, that was Friday.
Yeah, that market just shot up, man. From Thursday to Friday, the market went up 1,100 points. That's crazy. So these are 12-hour candles. So 1, 2. So what is that? 36 hours? In 36 hours?
Well, that's preparing for the sell-off.
Well, it is, but my point is, if you were trading up, if you got in way down here, you had 12, 24, 36 hours just to buy. Straight buying action, straight up.
That's a lot.
That's crazy, man. I mean, you could have did some damage. Well, Leander, you did some damage. Will, you did some damage. But this is crazy. And look, it hasn't even attacked this liquidity. It hasn't attacked any of this liquidity in this wick if it's going to go up here. It hasn't attacked any of this liquidity. This is the liquidity that ICT was talking about 2 weeks ago. Then it hasn't touched any of this. So just think about this. If this market continues to buy, even if it just buys to this moving average, this 200 period moving average, right? That's another 2,000 points. 1,400. Let's call it 1,600 points. That's roughly about 1,600 point buy-up. I can see it. That can very well happen. And I think it will. I think it's going to come back up, around this level, 2,000 points. I mean, people, man, that's a lot of movement. And then just to sell back off, when they announced that we raising the interest rate a whole 100 basis points?
Beautiful.
Yeah. So there's plenty of opportunity. I don't want people to feel like they've missed the boat, but these are moves that aren't commonplace in any other market. Like any other time is what I mean. Normally, you don't get these crazy swings. These crazy swings are enough to do real damage, like to make tens of thousands of dollars if you're a US 30 trader or whatever, if you're an indice trader. When this market falls like this, you could have made 50,000. Now it's climbing back up another 50,000. This is June 9th, and now we're in July. So last month you could have made 50 grand. This month you make 50 grand. Maybe it drops again, you make 50 grand. That's 3 times, that's $150,000 if you're just trading indices or whatever, that you have the ability to make because you have ridiculous swings in the market. So at some point, as a trader, when you get these types of moves, you're going to be on the right side of it. You're going to be able to take advantage, even if it's by accident. You're going to be able to take advantage of that move. And you're going to pocket some crazy sum. If you pocketed 50 grand, you didn't even have to trade. And then let's say you just said, okay, I'm trading. This is the first time I re-entered the market from way over here. Now you're making another 50 grand or whatever, just trading it up. So my point is this, guys. If you're in a group that consistently calls the setups or sees the setups or explains the fundamentals, it's only a matter of time before you're able to capitalize on some of these moves. And once you start capitalizing on these moves, then you can lessen the amount of time that you put yourself at risk, right? You don't have to be a Will. You don't have to trade every day, right? You don't have to be, somebody that trades 5 times a week. Maybe you want to trade 3 times a week. Maybe you want to trade twice a week. Maybe you made your 3 grand that day and you're done for that week. We have to understand who we are. Before I can be Will, I have to be me. And I have to understand, man, I go to work every day and I make 5,000 a month. I make, however much you're making a month. I don't want to downgrade you guys. Whatever you're making a month, you know what you're making. If you made that in one day, or if you made half of that in one day in the market, why are you trading the next day with Will? No, I mean, maybe you need to rest until next week. You have to make realistic goals for yourself, right? You can become Will next year, or maybe it takes you in the next 6 months. You don't have to trade with his frequency. I mean, he does this every day. You don't have to do it every day. Maybe you just do it once or twice a week. Do you guys have any questions?
He's speaking facts.
Leandra, do you guys have any questions? Anybody? Comments? I'm doing all the talking, but I don't want to talk at you guys. I want you guys to understand, where I'm coming from. I want you guys to understand how the level up actually looks, or how it works. It's not a overnight, I'm making what this person is making, or I'm trading like this person. It's gradually, okay, I see these moves happening. I just don't understand how to capitalize. I'm messing up the execution. Then it's like, okay, I execute. Now you keep that money. The way you keep the money is you keep your butt out the market. You don't go back and keep trading. Or if you trade with Will every day, there's nothing wrong with trading with Will every day, but understand tomorrow you get in your demo account and trade. You don't trade the live account that you made the money with. So I just, if you guys understand, or if you have any questions, please ask. Now is the time to ask. You have the captive audience. You have the people on the call who have been where you are, and you know, who have the experience to say, hey, yeah, it looks like this or it works like this.
Somebody had typed in, why did Euro USD fall or the Euro fall? I have,
Well,
Oh,
No, I
Yeah.
asked why did it buy because
Oh,
I
buy.
expected it to fall because it's supposed to be super weak,
well,
but
it is.
I didn't understand what
I'm
happened.
glad you asked that because let's talk about it. Euro USD.
Now,
expected-
does that go with the fact that they're as strong as the dollar now or something? Because
They're
I
not
had read
strong.
that
So
headline.
parity is bad. Like the euro has always been more valuable than the dollar, except for a couple of different times. So it is falling. But if you look at this is a monthly chart. So if you look at this monthly chart, it can't price doesn't just fall, right? You have retracements. So we broke structure on the monthly chart, right? What do you expect to happen when we break structure? Kenya.
Pull back.
Okay, so you see we're getting wicks at the bottom of these candles, which if you understand price action,
The buyers are entering the market.
well, yeah, you know, that's what they say at least, you know, and it's a pullback. So if you look over here, when you have these red candles going down and this green candle going up, right? These green candles, you know, on a higher time frame that these have there has to be an order block right here. Impulse, pull back.
Wait,
impulse.
say that again. Why do we know there's a order block right there? Because it's such a small amount of candles that
No,
pull back and then
no,
Let's go up higher and show her what to.
well, yeah, I have to find it. Let me see if I can get the 2 month. 2 month. All right. So an order block is just impulse move, pull back, impulse move, right? Impulse move, pull back, impulse move. These are order blocks, right? Would you agree with that?
yes.
Okay. So if you're on the weekly or any time frame that you're on, and you see a series of red candles, you know.
Sorry, Todd, why is the higher time frame significant?
Well,
Just explain.
okay.
'Cause
Okay.
I know why, but like just
So
explain.
higher time frames are significant because the higher the time frame, the more it's going to be respected more, right? You can get your direction, you can get your confirmations, you know, by the higher time frame. It like on the weekly, if this is a uptrend, then we know this market is likely to continue going up. All these pullbacks on the lower time frame, it looks like a downtrend. It's not. It's still the weekly. The price came from here way up here. It pulled back. It consolidated. It pushed up again. It pulled back. It pushed up again. It pulled back. So if you see these pullbacks, and then you have green candles that go higher than these pullbacks, on if you go higher on a higher time frame, you'll see these as order blocks. Whereas on the weekly, this is 3 weeks. And then you have like 4 or 5 weeks of price climbing. If I go to the monthly, I should see an order block. If I don't see it on the 1 month, I go to the 2 month. If I don't see it on the 2 month, I go to the 3 month. There it's going to look like an order block. That's what happens when order blocks are created. Order blocks are nothing more than this pullback and then the price going up. So there's your order block right there. You see it? Can you?
Yes, I see it on the 3 month. I thought we saw it on the 2 month too, but I definitely see it on the 3 month.
So on the 2 month, it was. I
So
see.
do you measure the order block from the wick to wick or to the body? Sorry,
Yeah,
can you just
wick.
explain?
It's wick to wick, but the point is, if you see this pullback and you see the market go higher, you know that there's an order block there. You need to get there as a trader. I understand everybody is not there right now, but I want you to understand the gist of what I'm saying. The market went up, it pulled back. We saw the pullback. You guys didn't see it as an order block, but that's how I understand the pullback is an order block, especially when the market goes higher. So when you see this market push down into this order block, you know you can expect a reaction, right? So when you ask why did the Euro USD pull back, the obvious answer is it hit this order block, right? But
what kind of order block is that? Is it a bullish order block, bearish order block? Explain.
Right here, this is the
people in the back. Explain for the people in the back.
This is a bullish order block. You see the market went up, it came back to this order block. You're going to get a reaction. It's going to bounce, right? We know that the dollar is still stronger than the euro. Now, I want to explain it from a different way. The market doesn't just fall straight down. What happens? The market has to retrace, right? So if you throw your fib out here, if I take the market from the top of this wick, there's this green doji candle has a wick, and I bring it to the bottom of this wick, I can see a case for the euro to rally way up into my zone before it pushes down, right? Does everybody see that?
Yes.
This is really what I expect to happen. I expect to see this. Now, why would I expect to see this? We just had a break of structure. We just had this break of structure. Price needs to push back up to the order block that sponsored this break of structure or an imbalance. So you see this wick on this candle and this red, there's an order block here. On some time frame, I don't know where it is, but it's an order block there. Let me drop down to the weekly and see if I can see it. You see that green candle, that big green candle?
Sorry, get rid of your main watch list, Todd. On the side.
What?
Get rid of your main watch list on the side, please.
And Todd, why are you pointing out that bullish order block if we were talking about the sponsoring order block for the down move?
Okay, that's a great question. So you're looking at the bullish order block, but I want you to pay attention to this up move and then this series of candles that break structure going down, right? I don't care about the bullish order block. We just talked about if you have a push up and the candle's going down, it's an order block on some time frame. Maybe it's the monthly. Oh, there's a monthly order block, but this right here was the one that's in our zone. I know it's not green, but it's the doji candle. It's right here in our zone. Do you see it?
I see it.
You don't agree?
It's not that I disagree. I'm just trying to make sure I follow what you're saying.
That's the order block that sponsored this break.
What does the 50% on the fib mean? Like, why would it rally up to that area?
Prices at a discounted rate once it crosses here going up, right? Banks get involved.
What does discounted rate mean?
It means it retraced 50%.
50% of what? The fib or?
Of the move. So, all right. So here we go. The move started. Let's go back to the 3 month.
Why that order block and not the one at the top that looks like it's sponsored?
I want you to follow me. Let me rehash this. You see this wick? You see this green candle and this wick way up here?
Yes.
This is where I measured the move from. This move started and the market pushed all the way down. Do you agree with that?
Yeah, so I would have thought that was the sponsoring order block.
Well, Kenya, I need you to follow me. I'm going to explain this. From that wick, this market pushed all the way down.
Uh-huh.
Looks like about 2,000 pips. You see that? You agree with that? It pushed down 2,000 pips. Now it has to retrace. You see the retrace? You're right. It has to retrace 50%, which
At
is
least.
1,000 pips, right?
Does it have to retrace 50% at least, and it's possible
Well,
that it'll retrace
that's a
78%?
discounted rate. 50% is a discounted rate. It's classified as a discount. Banks aren't going to buy anything at full price. They're going to wait until they get it discounted. It's like you going to the store buying your favorite pair of products, and your husband like, no, you ain't buying them unless they're at a discount. So, and I'm not saying that your husband won't buy you full price, but you just understand what I'm saying. Maybe you're buying your kids some shoes and you're like, I ain't buying them kids. I ain't buying those shoes for that price.
Right.
You're waiting for them to go on sale. It's the same. Banks are the same way. They don't wait for this to go on sale. What I mean by they're not going to sell the euro down here. They're going to wait until it goes up here. Then they're going to jump in for the sale again and push it down further. You understand that, right?
Yes.
Okay. So this order block sponsored this move on this 3-month time frame, on the 3-month time frame.
Okay.
Right? But this is no different than whenever we get on the daily chart and we look at the daily order block, I always drop down to the 2-hour chart, right?
Right.
You never complain about that. So now, just act like this is the daily and I'm dropping down to the 2-hour chart. Okay?
And what did we drop down to from the 3-month?
We drop down to the 1 month. For me to find, all I'm looking for is an order block in my zone. This is my zone. So I need to find something in the zone that makes sense for this market to turn around.
Gotcha. And your zone was created based on the entire move from the higher time frame.
Yes.
Okay.
Yes.
Okay.
So this is my area that I'm going to start looking for things in my zone. Now, this 1 month chart is huge. So really, I want to be able to keep drilling down, you know, and whenever I get to a level, here's a daily, there's an order block right here in the daily in my zone. There's another order block, or there's a wick that's not been mitigated, right? So if I keep dropping down, I'm sure I'm going to find order blocks or areas of interest within this wick.
What do you mean by a wick that has not been mitigated?
Okay, so what does this wick represent? It represents a green candle and then a red candle, right?
Right.
Do you agree with that?
Yeah, there's upward movement followed by downward movement.
And they're equal. The upward movement and the downward movement is equal, right?
Okay, that's how the wick was created. Okay.
There you go. So if you have a green candle, then a red candle, what is that?
A bearish OB.
There you go.
Okay.
There you go.
Okay.
So trust me, there's a bearish OB in this wick. I don't know what level it's on. And we can drop down until we find it. The wick is still there. So it's not on the 12-hour. Maybe it's on the 6-hour. It's still there on the 6-hour. Maybe it's on the 3-hour. It's still there on the 3-hour. There's the wick right. I mean, all those candles right there are part of that wick.
Wait, wasn't it inside that zone?
It's still in the zone. Oh, what? No, I guess that's not the zone. Huh? There it is. It's still a wick on the 1 hour. I need to see if I can. The only problem with this, like if I cut this time, it's not going to let me keep dropping down. Let me see.
Draw a vertical line on one of the candles next to it, and then you'll kind of get close every time you drop down, right?
Well, I'm gonna see if it'll let me drop to the 15 minutes. A lot of times okay. It's still there on the 15 minute. Jeez.
So was that not just like a news event?
Well, it probably was, but it doesn't matter if it was a news event. It's the fact that it happened. You know, it's there, you know, like you can't ignore it. It's there. And if it needs to be mitigated, it's going to be mitigated. Doesn't matter. I don't think it's letting me drop. This is the only bad thing when you back test. If you have to drop down like lower than the 15 minute, sometimes it won't. It doesn't keep that data that far back.
You got it. Can you press your auto button on the bottom left? No, right? Yeah. No. Yes. There you go.
Okay, now we finally getting some
There it is.
so all of this action happened in that wick.
Isn't that the red candle though? That one.
Well, it wouldn't just be this red candle. See how these candles mitigate this wick?
Mm.
And that wick went all the way to the top. So it's this area. I gotta move everybody.
Because that's on the 2-minute time frame. So on the 15-minute, it would turn out to be like 2 candles next to each other.
It is, but the area that needs to be mitigated, it would have to be somewhere above this level. So let me put a line. Okay, so the area that needs to be mitigated is above this little mountain peak. So price could come back to this order block. You see this order block right here?
You're going to put a line there, mark it up.
Let me mark it up. Let me mark it up. Let me move this stuff. All right. You have an order block here. You have this wick. If I can drop further down, which is it's not going to let me, but price could come to this order block. It could come to this wick. It could come fill this wick. The further you're able to drop down, the more you're going to be able to see what's exposed. And what I mean by what's exposed, you're going to be able to see the order blocks, which price could come back and tap into. So now let's just look at this order block. I want to go back up. Let me see to the 15-minute chart. I don't think that was right up here. I think the auto put us way down here. That was a fail. I think the auto put us way down here. All right. So if the way I always do it is I have to manually drop, keep dropping down. You're going to drop down. Let me see if I can just delete this price action. Yeah, I don't think there's a way you can just get around doing the actual work. I think you're gonna have to drop down. All right, there's the wick still. It goes all the way to the top here. I think the data's just not there on this 2 minute.
Todd, was that because of the box, the extended to the right box that you created, or was that was it wick? It looked like when you just clicked on it, it was the line that you create to create that zone.
No, let me see.
That was a replay, wasn't it? Should just circle the wig with a pen or something, and then you'll know where it's at.
All right, let me see. Let me see, guys.
Control Fe.
It is that's exactly what it is. Well, that's why we can't see it. Okay, so that's why we can't see the wick. But within this box, even at this 2 hour mark, there's an order block. There's another order block. There's an order block. You got 3 order blocks. 4 if you count this one, that are in your zone. Price is going to stop, or you're looking for price to stop. I'm not going to say it is going to stop. I should never say it is going to stop. But this is the area that you're going to look for price to reject and start building order blocks going back down. Does that make sense? If you look at the bottom of this, the thing that happened last week is it created your swing low down here. Y'all understand the significance of the swing low?
Yes.
It's a protected low
Well, until it gets violated.
until it, well, but that shows that it's gonna pull back some.
Well, I agree.
Yeah.
I think Euro AUD did the same thing.
Let's not talk about EA.
It did the same thing. Now, well, I would like to talk about EA. It's all the same. It's the euro. All the euro did the same thing. The interesting thing about it is, if you remember, when the week started out, we expected price to push way up here. And it just pushed up a little bit, right? You see that? Let me delete this. When the week started, this was a bearish order block. Y'all agree? We wanted price to push up into the bearish order block, at least towards the bearish order block, right? Before it pushes down. But we had dropped to the 2 hour chart and found an area of interest right here at this order block. See that order block?
Mhm.
Are y'all finished being salty? If we get this work. So look, we all expected for this price to push up to this order block. It never did. It pushed up here, and then it just pushed down. Well, now I think it could go back up to that very order block before it falls. If you look at the weekly, and you put a fib on it, price came right back up to your zone and pushed down, right? It's all kinds of turbulence in these wicks, all kinds of rejection. You know, it's meeting order blocks, so it's just going to bounce. When it bounces, it'll probably come right back to the spot that we thought it was going to come to, right? It just didn't happen when we thought it was going to go. So maybe it'll come back up, and then it'll push down a little further. Maybe it'll push down to equal lows.
It'll probably get there, about, October, November timeframe.
Like, this ain't gonna take that long, but I mean, y'all, you see how it's moving, right? It's just not going directly to the spot. It's down, up, but not quite as high. Down, up, maybe.
And I'm sure it's probably a order, that long wick, that bullish order block that was weeks and weeks and weeks. Yeah, that one there. There's probably an order block that it's going to tap into.
Well, you know, it's plenty of order block here, but this order block here, it was an order block here. It never made it past. So the people who first started trading, remember when I was saying you got to frame your market, and this is why I don't like trading through order blocks. When you frame the market, if you drop down, I'm sure it's several order blocks right here. Order block, order block. This is a Savannah order block. But the price has to pierce through all these problems. And it's just going to take, a little bit longer for it to push through, than it would if they weren't there. So I think the trade setup is still solid, and maybe it doesn't go all the way back up, right? But it's just a thought process, that I had when I was looking at those charts. This is a bearish order block, which I guess doesn't mean much if it doesn't push past this bullish order block. But whenever I was looking at this chart, and more, it was more so EU and maybe EN than EA. But if you were in Ruby's class, you would look at this and you would say you had a reverse head and shoulders right here, right?
Yeah, that's what it looked like, an inverted head and shoulder.
This stop loss really needs to be lower, like to the bottom of this, because I think that it needs to push down and then push back up to this area if it's going to go up here. There's some imbalance right here. I mean, there are plenty of targets that it could hit going to the upside, but the point is, it just didn't push down as fast as we thought. And the reason I put, if you notice, I have a 200 and a 20. But this is making me think it's just going to ride this 20 down. So remember, y'all asked me about these moving averages.
Yes.
Okay.
Well, you had the 9 and the 13.
Right, so when did you change them to 220?
So whenever I look at the charts, I like to get confluence. And when I look at this chart, all I see is sell. when I look at it on this 8 and 12 hour. So this is, remember I was telling you that Oliver Velez has an entire trading system based on moving averages. Do you guys remember that conversation? Some of you don't remember it because you weren't.
Yes.
I think you need to go back and explain when you use the 9 and 13. Because there's
Right,
confusion about why you switch. So you need to go back to and tell them why when you use the 9 and 13. Why you're not using it here.
Okay, all right, y'all. So let me go back. Really it's not important, but I'm gonna go back and explain it for the people in the back. The 9 and 13 I like to use when the market is trending, right? So if this market is trending, really if you think about how the JPY pairs were moving, I'm going to switch the chart to show you the JPY pairs because I want everybody to see.
USD JPY is the best example that I know of.
Well, all of them trended, so it doesn't really matter. Every last one of them shot up, right?
What is the 916 or 1619, whatever? What is it?
No, it's not what I said, but hold on, I want to explain this.
Well, what is it? What is it?
They're moving averages.
Oh,
So if you're trying to trade a market that's going straight up, like this market is, I want you to think about when you would get in this market. If the market came from way down here and it rose 1,000 pips and you're waiting on an order block, you got one order block, it didn't tap you in. How the hell do you get involved and pick up some of these 1,000 pips if you trade the way we trade? You wouldn't. You wouldn't be able to get involved into this order block and it doesn't tap you in either. It just goes up another 2,000 pips, right? Does everybody agree with that?
Yes.
So in order for us to get involved, I break out my little moving averages and I use my 9 and my 13, right? And when the market pulls back to my moving average, I can get involved. When the market pulls back to my moving average, I can get involved. Right? So same way going down. When the market pulls back to the moving average, I can trade. Comes way down here, pulls back to the moving average, I can trade. Comes back here to the moving average, I can trade it. That's why I use my 9 and my 13 period moving average. It helps me determine when is a good time to enter this market, based on the strength of this trend. Now,
so do you use a 9?
I'm sorry, y'all, go ahead.
I'm sorry, do you use the 9 and 13 with the fib as well, or do you just use it on its own?
I use everything.
So you would get in at the 9 and 13 without doing the fib, or?
No, I use it as confluence. I'm never just going to enter based off of the 9 and the 13 just because it's at a sweet spot. There's going to be some lower time frame confluence. It's not in. I'm not entering just because the price is at the 9 and 13, right? But that's a level of confluence. That's a reason for me to enter.
Okay, that's what I wanted to know, just for the people in the back,
Right. Now, listen, there are people who trade moving averages that do it just because of that. And this is why I wanted to bring it back to the 200 and the 20, right? This is an Oliver Velez thing. So
okay, can I just ask a question real quick before you move on to the other ones?
All right, go ahead.
The 9 and the 13, which one, like does it have to move back towards to, or does it matter, or like, what do you see, or
You said the
Does-
913 what?
you said it needs to move back towards it? Either both of them, just one of them, or,
So the 9
Right.
and the 13 are very close to each other. If you look at this, and so really what you need to do, or if you want to learn about these moving averages, is you need to go to YouTube and pull up an Oliver Velez video. So here's how I would do it. I would color one of them, probably the 13 moving averages. I would make it red. I would make this red. I would go to style and make this line red, because this, the color of the moving averages can help you determine whether it's a buy or a sell, right? And the green line would be the 9, right? So whichever
that's the
line is on,
money line.
whichever line is on top is what you're doing, right? The red line is on top. When the price gets there, you're selling it. Now the green line is on top. So when price touches it, you're buying. Does that make sense?
Okay.
Now, again, if you're gonna use this, you need to go and do the research. Listen to Oliver Velez explain it. I'm loosely explaining this, right? But I understand the concept because I studied it. But like, I don't need indicators at this point, right? But I do use this as some confluence. There was a time where I couldn't trade without an indicator. And this helps because it lets you know. Buy.
What? Todd,
Yes, sir.
that's very similar to the ADX that I use.
Yes, it's very
It's
very
exactly like that. So when I use that, that's how I trade. I keep that. I don't even take that off.
well,
I think
exactly.
mine is like 8 and 14, and yours is 9 and 13. But
There
it's
you
like
go.
almost
It's exactly
the same.
it's very
Yeah.
to the it is.
So
It is. So I mean there's you can't deny that it works. Like if you look at this, you can see when it crosses over, it tells you to sell. Right?
Yeah.
The only problem is this is a lag. So the sale actually starts here, but you don't get the signal until here. I mean, you're still going to be in profit. It's still going to work. But if you traded order blocks, you would already got that bearish order block here. It didn't tap you in. Maybe it tapped you in right here. But still, the point is, this works. Like it signals you to buy or sell, right? And it gives you a reference point when the market comes back to, hey, man, I need to look at getting in for a buy at this level, right? I mean, there are always chances where you're going to get wicked out of, just like it went down, you would have got wicked out of this trade. But hopefully you're not trading a monthly chart just based off of this. There are other ways and other things that you can use as confluence. Yes, Felicia, when they cross, it's a reversal. So green, buy, red on top, sell. Green on top, buy, red on top, sell. It's really that simple, right? But I would suggest you go to the source, which is Oliver Velez, and he will give you 1,000 different breakdowns on the
Picture of power.
So, well, that's what I'm going to talk about. That's why I would.
Oh my God, I don't want to hear about no damn picture of power, man.
Well, no, it works. If you look at the 20, the reason I had the 20, why y'all everybody got pissed off at me because I changed it to the 20 and the 200. I want to show you something.
Oh, the picture of power.
Yeah. Well, this works, guys. You see how
I didn't watch the Oliver Velez video.
well, because we don't have the time. But look,
No, I said who did not watch it.
a lot of them didn't watch it.
This ain't the first time we've talked about this.
Well, but they didn't watch it. So you see how price is right here, and the 220 are close together. The red line is a 200 period moving average. The green line is a 20 period moving average. What Oliver Velez says is that price can go away from the moving average, but it's always gonna try to come back to these moving averages. And these moving averages are always gonna try to come back to each other. So the most ideal time for you to enter a trade is when the price and both moving averages are all close together or touching, right? This is the ideal time to enter the trade. So when you see this price break through the 200 and through the 20, it creates what we call the picture of power. The picture of power is price below the 20 moving average and the 20 moving average below the 200 period moving average. What he would tell you is if you can catch this move right here, you're going to make a lot of money because this picture of power is going down. You could trade this all the way down. If you had caught this move, you would have got in on this wick and you would have caught all of this 1500 pip move if you understood the concept behind this picture of power, because you have price below the 20 and the 20 below the 200. You caught it on the crossover. It retested. As soon as it retested, you should have got in for the sell. Now, if you're an order block trader, you got in for the sell anyway. Because there's a bearish order block, it tapped you in. Now you rode this all the way down. So I want you to understand you're still getting in this trade as an order block trader. But Oliver Velez's concept is true. Picture of power going down, price collapses, right? Now, price comes back to the moving average, right? Then it came back, it broke through this moving average, retested, and went right to the 200. Retested, it bounced off the 20. Now you got the picture of power, right? When it crosses over, you got the picture of power going up. You got price above the 20 period moving average, the 20 period moving average above the 200. So if you had caught this move, now you're in the trade and you can trade it up. That's in a nutshell, that is the picture of power, and that's the Oliver Velez concept. Now, let me go back to the chart we were looking at and why it's good to have more than one confluence, right? So when I was looking at this the other day, I didn't have the 200 and the 20 on this 12-hour chart, but this 12-hour chart makes me believe that we're gonna sell. Now, here's the interesting thing. We crossed over the 200, right? Now, all we're waiting on is for this cross. And for all intents and purposes, it's happened already. Remember, these indicators are lag indicators. We crossed over the 200. We've retested a couple of times. So now we get the bearish order block. This price should push down, and guess what we're going to have? We're going to have price below this 200 or this 20 period moving average once it crosses over on the chart. And we're going to have this 20 period moving average below the 200. So this is probably not going to go back up to the area that I thought. I mean, I guess it could, but because we have a bearish order block here, it makes me believe that we're just going to go ahead and cook off. Can y'all see that?
Yeah, I mean, I think it might sell a little bit more, but it is going to go back up there is what I think.
Well, eventually, but it will probably push down, maybe even to our take profit before it goes back up there.
Yeah, it might. And the other thing I like you've touched on it with these moving averages, but the lion's share of the down move has already happened.
Well, yeah, but just
downward move.
You're right, but even if you catch this move from here, this is Still 300 pips.
Well, that's assuming it goes down there.
It is
Yeah,
going
I
to
think it's I think it's going down. I was about to say what Felicia just said. Even on the daily, it's Wyckoffin. So Wyckoffin.
It is. I agree. It is going to go down here. I mean, listen, it's eventually going to go to this level.
Yeah, I agree. But I think it's going to break that I think it's got to break structure to that left side right there, in the middle,
Right.
and then bounce back to.
Back
I think that's when it's going to go back up.
Well, I agree too. We just don't know how low it's going to drop once it breaks this structure. Maybe it drops to this low, or maybe it just drops to this green line and allows you to take profit before it goes up. But the point is this. Just by using that confluence, this Oliver Velez, I think that this is going to push down first. Just another level of confluence, because we have the picture of power right now. All we're waiting on is this cross. It's going to cross. It just hasn't triggered yet. It's going to cross because price already crossed. All this conversation was sparked because Kenya asked what happened to the euro. So now you understand that the euro is just retracing, right, Kenya?
Yes.
Every pair is going to eventually. So I think we just got caught up in a retracement. And in a lot of ways, the dollar did the same thing, right? Didn't the dollar show we gave back a lot of gains in the dollar? This is a weekly. You got a bearish order block on a daily, right? This dollar needs to pull back. When it pulls back, where is it going? It's going to push back towards this moving average. The dollar pushed up, it came back to the moving average. It went up. It's going to come back to the moving average and then go up. That's it's inevitable that price is going to push back towards the moving average. All this moving average is a sum total, of the closes. It's an average of the last 20 closes. So price is going to always end up coming back to this moving average. Eventually, it will come back to that 200 period moving average too. But if you look at this now, you have the picture of power going up because you got price above the 200, the 200 above, price above the 20 and the 20 above the 200. So if you had caught this trade, this is what Oliver Velez teaches. If you had caught this trade when price crossed over this 200 period moving average, look at how many pips or look at how far up you would be. That's 8,000. Of course you can't trade the Dixie in most funded accounts, but this works on any pair too, right? Just kind of helps you understand where you are in the market and what the market is doing. If you have your moving averages on and you get in that trade, you'll understand it, man. This is still climbing. I watched a podcast on somebody who had caught the USD JPY trade from the bottom, and he was at some ridiculous 1 to 600 and some RR, and that was a month or two ago. So he's really ridiculous right now. It's all about how you trade and how you view the market, whether you use indicators or not. I don't trade with indicators, so a lot of these indicators aren't on my chart. I only pulled this indicator out because I wanted to see on the higher time frame where we were. I didn't drop down to the 12-hour, which is, I'm glad I did today, but that makes me change my bias towards EA. It makes me feel like it's going to cook from where it is right now.
So does it make sense to apply this picture of power on the higher time frame more so than on the lower ones?
So again, I think you have to. This is what I'm going to say. You have to go listen to Oliver Velez talk about it. That's what I want you to do. I want you to go to Oliver Velez, Picture of Power.
Okay.
And I want you to listen to him explain. I want you to take my explanation because it's not my strategy, right? But I would tell you this, that the higher time frames always hold the most weight, right? You're always going to take your bias from a higher time frame. But I don't want to take Oliver Velez's trading methodology and butcher it, right? It's been at least a year and a half since I've watched an Oliver Velez trading video. Now I watch his rant about the cons of trading all the time, but to watch a trading methodology video, I don't trade like Oliver Velez at this point. I know that that works because I've used it, before in the past. But what I found out since I've been trading smart money is I can catch the move before Oliver Velez's strategy tells me to get in the move, because indicators are all lag. They're always going to tell you after the move happens. They're not going to tell you before the move happens. You got a bearish order block right here where price broke. Oliver Velez thing ain't telling you to get in yet, right? But this bearish order block is telling you that we're going to sell. And you're looking for price to push back up into this bearish order block, and you were looking to catch this entire sell. Well, if you waited for the signal, you don't get the signal until price is way down here somewhere. Then you get the crossover. So you've missed, pieces of the move. And it's okay to miss pieces of the move, but if you have a better method of entry into this move, then for me, I want to use a better method of entry. And for me, that was the order blocks. But I would encourage you to do the research because, I got a lot out of it. That guy has been trading since the 80s. He in a lot of ways, he's kind of like ICT. They're both, pretty arrogant. Would you say he's arrogant, Shai?
He's more arrogant, or maybe they're on the same level.
Oliver Velez is more arrogant.
No, I would say they're similar. Maybe he's not more, but they're both are very cocky. Yeah.
The funny thing that I find about Oliver Velez is he's going to tell you that he's been dubbed the godfather of swing trading. The venerable Dow Jones named him. He's going to give you his thousands of different accolades. He was a trainer of traders and all this stuff, right? So,
I would say, in my opinion, ICT is probably a better trader. I like his concepts and methodology. To me, are better than Velez's, but they're both obviously
right. So but still good information. I think you can use all of these guys who have found success. You can take it and you can listen to them because it works for them. It's no different than me taking Will Ross's strategy and using it because it works. He'll explain it. You get in. I mean, it's undeniable that it works, right? If you want to trade like that, then there's a blueprint for success. The same way there's a blueprint for success here. You don't have to catch every pivot of the move for it to be a good move. Trust me, it works. He's the one that gave me the percentages of retracements. You know, like, you know, that for those of you who don't know, you can trade strictly retracements and you can be very successful. The market is going to retrace. Every one of these, if you look at every one of these candles, they're retracing. That's what the wicks are. So after a move, if you just trade the 23% retracement, you're going to win like 90% of your trades, because every retracement, 90% of retracements go at least 25%. Your Fibonacci, the first level of your Fibonacci is a 25% or 23%. So here's what I mean. If you took this entire move and you put the fib on it, as soon as you saw this wick or whatever, and you traded it back up to this line, you're going to win that trade. As soon as you see that wick, you can jump in for the buy and take it up to this line. You win. You win. That's a win for you. Now, your pip count may not be high. Maybe you get in right here. That's 132 pips. I mean, that's a lot of pips, but still, that's a win. You don't have to trade it all the way back to the zone. You can just trade right there. You win. I used to trade just retracements, and you know, I was successful trading just retracements. The problem is you get greedy. You want more. I want the move. It's cool catching this 132 pips. But what about this 500 pip move? There's a way to do that. There's a wick right there, and you could have traded this whole move down. But if you just wanted to trade retracements, there's Oliver Velez will show you how to do it, and it works. And he'll tell you the success rate. If you're trying to trade the 38.2 line, I think you fall from the 90% to like the 65 or 70% range. But if you win 65 or 70% of your trades, you're still very successful, like super successful. So, you know, if you guys want to learn that kind of thing, all you got to do is YouTube Oliver Velez, and, you know, he has hundreds of videos. And he explains, you know, in my opinion, very well. So I would encourage you to do that if that's what you want to do, F. But for the sake of time, because we've been on here for a while, ranting,
Okay.
I want to look at a few pair, like maybe AUD Chef. Is anybody trading AUD? Kim, who raised the interest rates? The CAD.
You trying to be funny?
No. Why would I be? No. Whatever. You know. Can we look at CJ? Yeah. CJ. Why do you say that, Kim? Did you have a bad experience?
No, you know, well, I guess maybe you don't know, because you know I don't trade news. Sorry.
Well, listen, we all trade news, whether we know it or not.
Whether I know it or not, but no, yeah, I don't do news. I don't know. I guess CAD, yeah, CAD. What you said?
CAD JPY. I don't know why this girl stuck on CAD JPY, yeah. But we're gonna look at it.
Oh, I'm not on CAD.
Wait, because CAD is strong and JPY is weak, so that's a good pair to look at. It's also in a trending market.
Okay.
So it seems like a safer trade because it checks those two boxes.
Okay, I hear you. Is there a better trade than this?
I'm sure there's always a better trade than what I picked.
Oh, well, I mean, what about USD JPY?
I don't really like the US pairs. The US is dangerous.
Yeah, so I mean, is there a stronger pair than the dollar? This one moved 122.9 pips this week.
I mean, this is useful info. That's why I want to look at it together so you can tell me why it's not the ideal pair.
This one moved 253 pips. Which one is stronger?
Which one moves more?
Which one moves?
USD JPY.
Well, I mean, remember, the name of the game is to pair a strong currency with a weak currency.
Right.
I agree that the CAD is stronger than the JPY, but if you were in it for a long last week and I got in USD JPY for a long, who made more money?
You did.
Right. So don't you want to strengthen your case to make the money? You want to identify your best chance of making the most gains, right? Now,
but UJ did some retracements that if you didn't have a good entry, you didn't catch those 200 plus pips.
well,
So CJ might have been
let's look at
easier,
Are we talking about the daily? Because
I mean, I'm looking at it going forward. I didn't trade it this past week.
You did some retracements. I mean, this is Friday, this is Thursday, this is Wednesday, this is Tuesday, this is Monday. So I'm questioning what you mean. I mean, this one went way down, it came up, it went way up, it came down, and it went back up. All of them, every pair is going to do some retracements. I don't want you to feel like they're not. This is Friday, Thursday, Tuesday, Wednesday, Monday. To me, this is Monday. It shot way up. It shot, man, what was it? 200 pips? 130 pips on Monday. Remember that Sunday to Monday, this shot way up. Remember, I told y'all in the chat that this went way up.
Right, and so then anxious Kenya jumps in on that next day on a Tuesday, thinking,
Right.
"Oh, it's Tuesday. ICT said trade pairs on Tuesdays, and we're going up. So I'm going up, and I get in at the top of that red candle."
Well, hold on, y'all. Hold on. Let's talk about this, Kenya. If you were in Ruby's class, and price broke out, it broke this level. What does it need to do? You can't.
It's got to pull back to the level.
Yeah. So why would you buy it at this high? Why would?
Because sometimes I forget.
You're anxious. You're greedy.
Yeah.
Yeah. Don't be anxious to hop in the trade. So it doesn't matter that it broke out. Don't have FOMO. Wait for it to pull back. It's going to pull back. In this case, it pulled right back to the level and let you in.
You're right. And I told you my problem this week or lesson was patience. So if I were patient, I would have gotten a better entry.
You're in the daily swing trading class, right? So if anything, you would have waited until on Monday, it had this order block. So you had.
Can I just give my caveat? I didn't trade UJ. I'm just speaking in terms of what I would have done. Yeah. And I would have prematurely jumped in this trade thinking, oh, it's going to leave me. It's going up.
There's no way you could prematurely jump in if you're trading the way we trade. There's an order block right here, right? We're waiting for the price to come back to tap us in, which it does beautifully. Now we're in the trade. There's no way that you could have gotten fooled other than hopping in this trade in some place that you don't have no business hopping in the trade. Right?
Correct.
So yeah, if we're going to trade and we're going to trade the way we trade, we have to stick to what we say we're going to do. And if you can't do that, then you're not ready to trade. You need to hop back in your demo. Please tell your husband to take your account because
I'm in my demo.
Well, there you go. Tell him don't even allow you to get another account. You need
he don't have to take my account. My Forex funds took my account.
Yeah, okay. But he need to take your card from buying another account because you need to trade until you can trade the rules, your own rules. Don't even buy an account. If you know you can't stick to any rules, then don't buy an account. And I would also suggest that you go listen to Jessica Lane. You know who Jessica Lane is?
No, but I hear y'all say she's really cocky and
We didn't say
arrogant. No, you said arrogant.
No, I didn't say Jessica Lane was arrogant.
Oh,
Anna.
Yeah, that's Dez's homegirl. Dez's mentor, Savannah, you know.
Savannah's the arrogant one, but Jessica Lane, is she the one that has the courses like thousands of dollars or something?
Yeah.
But
listen, just because they charge what they can charge, but if you go listen to this YouTube right here, man, she makes some beautiful points. Like she hits the nail on the head. She talks about very real stuff, like the importance of discipline. And she sees, it's funny because the way she sees things is exactly the way I see it, about people who are obese. It's the same, like your trading is going to take on it's going to personify who you are as a person, right? And as you become a better trader, that should take over you eating better. It should take over you, like your discipline should come, like you have to have some sort of discipline. If you're not a type of person that's going to get up and do the same thing, or get up and handle your business, or be disciplined in that, it's probably going to be hard for you. You haven't mastered yourself, basically. You have to be able to master yourself. And one of the most important things to remember is most learning experiences do not happen in your areas of comfort, right? Like you're going to have to get out, mark up a chart. That might not be what you're comfortable with doing, but you're going to learn when you go to do that, right? It's outside your comfort zone. It's the very reason why when you go to the gym, if you just sit in the gym and run your mouth, you're not going to have any gains. You're going to have.
I've gained many friends running my mouth in the gym.
Yeah, you'll have friend gains, but you won't have muscle gains. You'll just have mouth gains. But if you want to actually have muscle gains, or you want to change your body, you want to change something about you, your diet, you have to have the discipline to do it. We all have friends who maybe gone vegan, or they changed up the diet and they look completely different, but we don't have the discipline to follow suit. Your trading is the same way. You have to be a disciplined person. You have to get up and you have to listen to some dry ass videos. That's how it works. You're going to have to do it. There's no way around it. I might be more entertaining than Oliver Velez, but Oliver Velez is the one that has the experience trading those moving averages. So you have to go listen to Oliver Velez. You have to listen to ICT about the concepts. They actually work. I don't know anybody who's listened to ICT that came back and told me that his stuff is trash. Yet, how many of you have actually went to go look at the videos? So, you have to make a decision. That's the bottom line. Whenever I was in New Mexico with my brother, I ate chicken breast and a vegetable daily. I did not deviate, or very few times did I deviate from that. And it's just to create discipline, a level of discipline. I needed to get to a certain level. And there's no way around that. You can't fake that part like that. You have to get to a point where I am not taking the trade unless this. If you don't ever get to that point, then just don't, save yourself some money, right? If you're going to over leverage, just stay in your demo until you can get to a point where you're not going to over leverage. Sean said he only gets in his US 30 trades or his indice trades when they retrace 78%. If you can do that, you'll be very successful trading indices. If you don't, you're going to lose a lot of money because a 50% retracement ain't going to cut it. So, I mean, you just have to kind of understand where you are as a trader and where you are as a person. You know, you have to be the type of person who can you know, be disciplined, who can respect rules, follow rules. They're your own rules. You set the rules up because you knew that that those rules would help you out. I think a lot of people are saying buy this FJ.
Good afternoon, Todd.
Huh?
Hello.
How you doing?
Hi, Alicia. I'm doing okay. I was on one of the calls, the 5 o'clock calls, and I don't think you were at that one, but I had a question about the moving average. I realize you have a 200 moving average on your chart. What do you use the 200 moving average for?
Okay. Have you been on this call all day?
No, I think I came in about a half hour ago.
Okay. So the 200 period moving average is used in conjunction with the 20 period moving average. And Oliver Velez is who I want to refer you to, okay? You see these videos, how to be on the right side every time?
Yeah.
See how he breaks it down? 85% of all losses trade against the 20 period moving average, right? The 200 period moving average, he explains the relationship between the 20 period moving average and the 200 period moving average. So let me give you, I'll give you a brief explanation, but I need you to go back and look at the video, okay?
Okay.
Okay, so if you look at this chart, what I can tell you is that there's a relationship between this price, there's a relationship between this 20 period moving average, and there's a relationship between the 200 period moving average. They all want to be together, right? They're one happy family here, right?
Mm-hmm.
At some point, the price moves away from the moving averages, right? And in this case, it is moving up. Now, once this price moves away from the moving average, this 20 period moving average wants to follow the price. So it moves away from the 200 period moving average. So you have the price above the 20 period moving average and the 20 period moving average above the 200. We call that the picture of power. Okay. We call this the picture of power to the upside. So if you want to trade this, you're trading to the upside. This is this tells you that this trend going up is very strong because the price is above the 20 and the 20 is above the 200. Okay.
Mm-hmm.
Now, at some point, the price misses the 20 period moving average and the 200 period moving average. So it's going to move back towards it. You see how it moved back to the 20 period moving average? It broke through.
Yeah.
And now it's moving towards this 200. It doesn't quite make it. It moves back up. Now you have the picture of power again, because you got price above the 20 and the 20 above the 200, right?
Mm-hmm.
So if you follow this, you're going to keep seeing the picture of power. And you'll keep seeing price trying to fight back to this 200. Eventually, they're going to come together. But because this trend is so strong right now going to the upside, you just have the picture of power. Now, if you go into the past, like before Japan stopped raising interest rates, but if you go to the past, you'll be able to see this price interact with this 200, right? So we go way back here to a time, this is February 2020, you had price way up here, it crossed through the 20 and through the 200. And then you had the picture of power to the downside, right? Because you got price under the 20-period moving average and 20-period moving average under the 200. So then you're only interested in taking trades to the downside. Okay.
Yeah, I'll check out the video. Reason why I asked as well, I saw in a video somewhere that the 200 moving average is normally used to check the direction of a trend. If it's trending up, if it's trending down, if it's above it, it's trending up. If it's below it, it's trending down. But adding, I guess, the 20-period moving average is adding another dynamic to
right
trend.
There are a lot of people use the 50-period moving average on whether to buy or sell, but the 20 and the 200 go together in Oliver Velez's strategy. Yeah. So, you can find success by utilizing the moving average. And he'll explain, he has statistics for everything, so he'll explain why you're losing your trades. Trading against the trend, you're going to lose. 86% of losses are taken against the trend. So don't do it. Don't trade against the trend. If you see this trending down, trade with it. Then you don't lose your money. But if you're going to trade like that, you need to hear it from him. And maybe you can trade like that until you understand the order block concept. To me, the order block concept is just better because you have a bearish order block, it taps you in, you're in the trade right here. You don't have to wait for a picture of power. You got tapped in right here at this order block. So you catch this whole move.
Okay.
Excuse me. Whereas
thank you for clearing that up.
Oh, no problem. How you decide to trade is a choice that you'll have to make. I just want you guys to go and do the research, behind how you want to trade. That's something that you can't avoid. You can't avoid the actual work and the research that you're going to have to put into whatever style you choose. And we're just here to kind of help you get exposure or help you get some experience when it comes to actually trading. So I think what I didn't even get a chance to go over it, but I think there are a few opportunities out there this coming week. I think AUD Chef is one of them. We had a recent break of structure. Price came back to the order block that sponsored the break. I identified this trade set up on Friday, and I think this market will continue to push up.
All right, you on the Chef JPY pair, you were saying it was buying, but I thought it was selling.
Well, I think it's selling too. I didn't say it was buying. What's her name? Felicia said it was buying, and I was like, I don't really like the way this looks for a buy. I like, it needs to break. I think it's gonna tap and sell. I don't know why she said it's buying, but I don't necessarily agree. Well, there's a weekly order block, so even though this is a weekly order block, I think it could just fill in this wick and start selling. So what I need to see is, I want to see the price tap in, and I wouldn't be comfortable trading it past this wick. It's going to have to show me that it's going to break through that wick, and that wick is this order block right here. So I expect for it to push down first, more than likely it'll push down to this imbalance. So maybe this is what she was talking about as far as it buying. You know, she got off the call, so I don't, you know, we kind of started ranting and everybody left the call. But this is still a good trade setup. That's still 200 some pips, even if it goes to this, you know, to the order block. It's a 200 pip trade. It's not a bad trade setup. So maybe this is what she meant, but you know, I need to see it break through this order block before I feel comfortable buying it further. Is that what you think too, Kim? Or you think it's just gonna sell?
Yeah, I think it's in the order block that it's going to sell from now.
Well,
You see
okay.
Order block that's right, the one that broke, the order block that sponsored the break of structure. Yeah.
Right. So what do you think it's gonna sell to?
Put the fib on it, man, because it looks like
You have a weak bullish order block. Well, you can't really put the fib on it because there's no wick.
no. I
Yeah.
mean, on a daily chart, you can. Yeah, I mean, it looks to me like a sell and a 78% pullback ish,
Mm-hmm.
and probably sell down at least to those equal lows. That's what it looked like to me.
That's what I was selling
Right
to.
here.
Yeah, start at the top of that wick. Well, it hasn't pulled back to 78 yet, but it's
This will be-
gone through to 60. So it's at a discount already. But that's what I see. You know, I don't know that it's going to pull back 78%, but it's pulled back already 62.
Well, I agree. But the confirmation will be this bullish order block. We know the price needs to push down and tap into the bullish order block before it goes back up. So yeah.
So, and the
Is-
reason why I'm saying it's probably not, like, if you go back to the weekly or even the monthly and you squeeze the chart in to and look to the left, like it is at a zone where, oh well, maybe not.
It
Yeah, I don't-
looks like it's already tapped the liquidity though, so it needs to come back down.
Yeah.
And is
That's-
that not chalk on the daily? Indicating that the market wants to, on the daily, indicating that the market wants to sell?
Well, let's talk about it.
Looks like it to me. But
Let's talk about it.
Let's talk.
This
That's
is
not a talk for me, but that's
it's not.
How is that not a chalk?
Listen, y'all. It's not a chalk because you broke structure to the upside, but then you came down, you didn't break structure, you stopped right here. Now this eventually breaks structure. A chalk needs to be up, down, break. It doesn't need,
Oh, you can't have that upward movement in the middle of the down break?
right.
Oh,
That's not how it works.
okay.
and see
So,
and
this-
see I
this-
would see the chalk as breaking that low right there,
Well, no, let's talk about it.
because in between that high and that low, it can still be a buy.
Breaking what? No, this low?
Yeah, between that low and the high,
Look, I disagree, Kevin, because look, this is chalk. You broke structure to the upside, immediately you broke structure to the downside. Price comes right back and sells. That's
With-
chalk. This is not chalk. It didn't break structure. It came up, it stopped. It went up. You see the difference?
I see what you're
Yes.
saying.
Now, this price never came down to break this low. But the
Right, because it's in between the zone where it's still a buy.
yeah, but that's still chalk and it's still sold for hundreds of pips, right?
Yeah, see. Okay, I was explaining for me, chalk is reversal and break of structure.
That's definitely
retracement.
reversal, Kim. 600 pips, that's definitely a reversal.
No, it's still in an uptrend. It's
We-
retracing.
I don't want to argue about the trend. You're right. But what I'm saying is chalk, change of character, is when you break structure. It broke this structure to the upside and immediately broke the structure that it left to the downside. That's chalk. Now, we don't know how low this is going to sell at the moment, but you know it's going to sell. So all you're saying is you're going to get into this sell right, you know, at the either the order block or the imbalance. And in this case, is an order block right here. But you're going to get into the sell based off of it breaking structure. That's all that chalk is. It's a change of character. Now, whether the price breaks structure way down here is kind of immaterial, but you're looking, this is the telegraph telling you, hey, we're going to sell because it broke structure, then it broke structure. It already, this signal is saying I'm going to sell. It's not saying how far I'm going to sell, but it's saying I'm going to sell. Versus this is not saying I'm going to sell because it stopped right here. It didn't break the structure. Does that make sense? That's whenever I say chalk, that's what I'm talking about. And if you look at a chalk video, here's a video I use. I don't know, who did you learn chalk from, Kim?
I'll drop the video in the I'll drop a video in the I'll find it.
Yeah, I think this is probably the video.
Online, you know, there's a good few smart money traders these days.
Yeah, this is the video that I listened to, and this is the methodology that I adhere to when it comes to chalk. And he explains the difference. He also explains the timing. You know, like it happened, this happened immediately, right? You broke structure and immediately you broke it back down, right? I mean, I know these are daily candles, but it's immediate on the chart. And in this example, you broke structure and then you immediately stopped and went back up and then you broke structure. So there's a difference. And I'm not here to say right or wrong, you know, I mean, definitely keep doing what you're doing. You find success in what you're doing, but the chalk, the way that I understand it, is just giving you it's letting you know that, hey, we're going to sell from this point. And, you know, I think ICT doesn't call it chalk, but he uses the same sort of methodology once you break structure here.
Yeah, I agree. Like once you break structure to the once you start breaking structure, it's likely moving or retracing back either to the 50% or the 78%, but that zone is still, you're retracing back, but that zone is still like you're still in an uptrend. You're still bullish.
Well, yeah. So, but here's the problem.
Unless it creates, well, for me, unless it creates a chalk, then you're reversing.
Well, listen,
the bullish.
So of course, this is still an uptrend, and if you look at it from the weekly, it just went back to the moving average. So. You know, it depends on what time frame you're looking at. Like you're saying that it's a zone. If you're on a lower time frame, it broke through the zone. Like on the weekly chart or on this daily chart, yeah. If your zone is a 500 pip zone, then yeah. Like if this is
see that whole would be the whole expansion. Like that whole.
But whose zone is 1,000 pips? You know what I'm saying?
You say whose zone is 1,000 pips?
Yeah.
Chef JBY.
That's like Ruby giving them signals out.
You know, like 1,000 pips, man. I mean,
most people be wrecked. Like if you was like, hey, buy this. Shit, we trade 600 pips, you wrecked.
Exactly. I mean, this is a 1,000 pip zone. I mean, that's huge. I mean, I don't disagree with what you're saying, but I'm just saying it's realistically that zone is huge, man. Like it's that's too big of a zone to try to.
I got me an account big enough to handle that kind of move. I'm arrived. I could be wrong on that kind of move. I have arrived.
Hey, when I jumped down to this 4-hour chart, this is exactly where I think this is coming. I mean, this makes sense because this is the top of these. It's the top of this Wyckoff move that happened. Maybe price will come back to the top, right? Retest it and push back up. Do you agree? Disagree?
I agree for that. I do believe it's probably going to come down, tap in, go back up, and then back down for the sell.
I think this is the I don't, you say you think it's already in the order block. Maybe it is on the higher.
Well, right, that right there is.
This
I have that marked up as well.
And then come down. So this is your zone right now on the 4-hour. You agree with that?
Hopefully, it's not 600 or 1,000 pips.
Well, it's not, but I mean, I'm trying to ask Kim, is this her zone?
My zone, yep. My zone is from the swing low to the swing high. I trade down
here.
Well, the one to the right. Yeah. Yeah.
Which one is the swing high up here?
So for
it has to be.
So that would be my swing high.
Yeah, but
I'm not saying it's going all the way up there right now, but I do see it dropping from the zone that you have marked up and then possibly going back up to that zone for the drop down.
Well, that's exactly what it's going to do. It's going to push down and then come in. But I don't know that it's going to push past this area. I think it might ping pong in here a couple of times. I'm not convinced that it's going to go back up. I mean, there's liquidity and there's an imbalance here. So, I mean, quite possibly if it bounces here, it can go up and fill that imbalance.
Yeah.
But it'll have to show me that it's going higher than that.
I think we agree.
I'm glad, girl. That might be the first time you agree.
No, that might be the first time you agree.
You're always argumentative, Kim.
I am not.
Tomorrow when we do the actual breakdown, we can see. Kim, maybe you want to do that. Don't you want to do the breakdown tomorrow?
No.
Why?
Wait a minute. I thought the losses. I thought Sundays were lost. The
loss for you, but then we had the swing traders call that we pick our pairs.
I'll think about it. Give me 24 to 48 hours.
Oh my.
Okay, sorry, I didn't mean to take you off Audie Chef. Audie, whatever you are. I can't remember.
Oh, it's Chef, AUDCHF.
Yeah.
This is the interesting thing. All Chef is buying, which means Chef is getting weaker. So maybe Chef is just not having a good week. This is saying this chef is, the British pound is going down against the chef. Maybe you can trade this down. Price went right to the moving average, sold off. There's a lot of wicks in these pairs. Well, especially in this British pound. Oh man, this trade also kind of set up perfectly. I didn't take it because it was wicking, but it was a weekly order block. It tapped right in and pushed down. See that?
Mm-hmm.
And I expect this trade to continue to push down too, because we had that break of structure to the downside. Price went all the way back up to the order block. Now it's pushing down. I think we have some range. About 300 pips at least to get to these equal lows down here. But back to Odd Chef. So if we look at the daily, when I saw this up move and this pullback, I pulled the fib out. $78.6. Bullish order block, 78.6. I think it's time to push up. I was sold once I saw that.
Okay, where did you put your fib? On which candle? On that red candle?
This green candle, the wick of this green candle, to the wick of this green candle.
Why did you only fix? Okay, because that one broke structure. That's why you
Well, this is where the move
chose that one. Or...
It's where this move started from. This up move, right? This up move, the pullback. I wanted to see where it pulled back to, and it pulled back. This is the 78.6. So once I saw it pull back there, I see this daily order block. That's why I thought that this daily order block would hold up, because it's right there at the 78.6. And you notice I have my stop loss right below the 78.6. Capiche? I mean, you see that?
Tapped in, yes.
Yeah, so I mean, you have to find a different entry, maybe you can find it based off of this 12-hour, no. There will be a lower time frame that we can find an entry. Let me see, the 4-hour maybe. So it looks like if you look at this up move, this green candle, if you take it to this wick, maybe this will pull back to the 78.6. Which would still be the same entry. You see that?
Mm-hmm. Ty, you don't see it coming back to, I can't really tell if it did or if it didn't. To the order block. Oh, wait a minute, it did tap. Did it happen? Because I'm looking at maybe that's liquid. Yeah, that one. Did it tap into that?
No,
to that?
It mitigated this imbalance. See this imbalance from this wick, this wick, it was the 50% mark. It tapped it. I don't see it to this order block, and maybe I'm wrong, but I don't.
Okay. No.
Because it had that 78.6. That's what sold me on it. Maybe it does, but I don't think it'll come back that far.
I don't think so either.
You know, the interesting thing though is you have lower lows, you have equal highs. So it's going to have to break out of this kind of bearish movement. On the 3 hour, it did break. You see that?
Mm-hmm.
That's not for me.
So now you would think that you would get a higher low, right? You get a higher high. Now you need a higher low.
Yeah. For the swing low. Okay. Yeah. Yeah.
So we'll just have to see if we get it. And you know, this is the order block that sponsored this break.
Yeah. Let's see it.
And maybe there's an imbalance. I don't see any imbalance. I'm on the 2 hour, so we just need this to hold. You know, we need this higher low. We need a higher low and then the push up.
So what you're saying is basically just tap into that last bullish order block.
Yep. If it just taps in, I'm cool. Doesn't get this far, I'm cool. You know, I'm cool with any stop. You know, maybe it stops at an order block in this wick. I just need the low to be a higher low. See, there's an order block right there. So maybe it just comes down and taps into this order block. You know, as it stands now, I think that's the trade that I'm probably gonna get into. You know, I'll look at a few more, but this to me was more attractive. EA is always attractive, you know, so I'm gonna have to look at that further now that I see that it's gonna cook off. All right, let me stop this recording because we really didn't break down many pairs today. I mean, I